Thank you, Colby. We'll continue to an invited talk by Yoav Soffer from the Bank of Israel. Yoav is advisor to the Deputy Governor and is managing the CBDC project at the Bank of Israel. He will tell us about privacy and technology aspects in privacy of CBDCs.
Thank you very much. So I don't need this, right? I just speak for myself. Wow, zero knowledge proof workshop. This probably won't be fun in this forum, but I can definitely prove that I have zero knowledge about what you guys are talking about here all these 3 days. But it so turns out that in the project that I'm managing, we did end up using this technology for a purpose that I will explain immediately. So I'll give you hopefully like a 5-minute review of what is exactly the CBDC and the digital shekel project, and then why we ended up using zero knowledge proof technology to test issues of privacy. I see that the question mark ran to the wrong place of the sentence. I hope that's the last bug that we have. Okay, so not the last bug that we have. Anyway, I told you we should have sent the file by email and not by this Google Sheet. Anyway. So I like to kind of set the stage because just to make sure that we all understand what we're talking about. What is a CBDC or a digital shekel if we would end up issuing a digital shekel? And by the way, important to emphasize, we, as all other advanced economies, have not yet made a decision about issuing a CBDC. But if we do end up issuing a CBDC or a digital shekel of the Bank of Israel, what would it be? So I like to explain it in the following manner. We can think actually of the types of money that are accessible for the general public to make use in their general payment use cases. So first of all, we all know cash. Okay, some of us even still have cash in our pockets, and we can use cash pretty much for a lot of things. We can buy coffee, we can buy groceries, sometimes we can pay our bills with cash. It's getting harder and harder to ride public transport with cash in many countries, but we can still do a lot of things with cash. And we have money in our bank accounts. And when we have money in our bank account, we have a deposit at the bank, so we can use that deposit to pay. So if I want to pay John from my bank account, I can use my credit card, I can use a payment app, I can use a check, I can use an ACH or an RTGS transfer. There are many ways that I can mobilize funds from my bank account to someone else's bank account in order to make a payment. Important to note, though, that the cash that I have in my pocket is a liability of the central bank. Okay, so it's actually a liability of the sovereign, whereas the money that I have in my commercial bank account is a liability of a commercial entity. Now, here in Israel and in many other places, but it is not something that we can take for granted, actually, both of these liabilities are very strong and very good, and we actually make sure that the liability of the commercial banks is just as good as the liability of the central bank. And probably if I approach one of you and told you, listen, I want to make a bank transfer for you, can you please give me 100 shekels in cash? You'd probably be indifferent. So you would be willing to give me the liability of the sovereign, and I would be giving you a liability of a commercial entity, and you would be indifferent, and that's great, okay? That's how it should be. But in the basis, okay, these liabilities are not exactly the same. Now, interesting to note that the public is not the only entity that that can use a central bank liability. The commercial banks also have they actually have deposits at the Bank of Israel, which they use to pay each other. And important to note, though, that the money that commercial banks have at the central bank is actually digital. Okay, it is recorded in a digital manner, whereas the cash that we, the public, can pay each other is actually physical. If I wanted to pay you with cash, we would actually need to be in the same place. Okay, I can't pay you with cash remotely. And this is actually the mere thing of what retail CBDC would be. If a central bank would decide to issue a retail CBDC, I want to get into wholesale CBDCs today, that would mean that we would actually allow the general public to pay each other with central bank money, which is in the digital medium. Okay, that's what we're talking about. And it's important to kind of set the stage. Now, we can talk in length about why central banks are considering this. I'll try and do it very shortly. First of all, many central banks are looking into CBDCs because cash is losing its space in the payment landscape. Okay, there are countries where cash is completely disappearing, and many businesses are actually not willing. Many merchants are not willing to accept cash anymore. This is not yet or not the case in Israel. cash has been growing significantly, and you can actually see that during COVID, actually, we can see that many people actually chose to exchange their commercial bank liability with central bank liability because COVID was a time of risk, right? So people wanted to be sure that they are able to pay no matter what. But anyway, cash has been growing and still is growing in Israel, so cash is not disappearing. However, so if we go back to these two types of money, the public's deposits with the Bank of Israel and the cash, the two of these together comprise what we economists call M1. And if we look at the share of cash in M1, we can see that, for example, since the 80s until the early, anyway, this is 1985, and this is about 2000, and this is about 2021, okay? So this was really not how it was this morning in my computer. So we can see that for a long time, the ratio between central bank money and commercial bank money was kind of stable, okay? But then the public has started to use more and more commercial bank money as opposed to central bank money. And I think that one reason for it is that central bank money is actually kind of getting technologically inferior as opposed to commercial bank money. Because if you think about it, there are more and more things that we do in our everyday life now that we cannot do with central bank money, okay? I can go to the movies and I can pay at the cashier with cash or with credit card, for example, but if I want to watch a movie on Netflix or Amazon or whatever at home, I cannot pay for that with cash. It just doesn't work like that. Okay, I cannot order a Wolt or whatever it is in your places if I want to order food online or something like that and pay with cash. So there are more and more things in the digital economy that cash actually doesn't enable us to do. And if we central banks consider to let the public use cash for day-to-day payments, it would mainly be because we would think that we would need to also provide our product, the cash, in a manner that is digital and that is actually in at least the same technology as commercial bank money. By the way, one thing you can do with cash, and you cannot do with commercial bank money, at least these days, is pay with anonymity. We'll get back to that in a minute. So actually, we've issued a long report, and we actually texted out several motivations why we at the Bank of Israel may consider to issue a CBDC. I won't get into them very thoroughly, but one of them is actually competition, okay, to make sure that we maintain the competition that cash actually maintains in the payment landscape. Another is innovation. You know, you guys know there are all kinds of innovative things that you can do with digital money that are not possible today, and maybe CBDCs could enable them. Resilience. CBDC might just be another payment system that we can use in times of blackouts, crises, whatever, just another alternative to increase the resilience of the system. Cross-border payments are actually very interesting. We are currently actually having a project together with the central banks of Norway and Sweden on cross-border payments. Once again, won't get into that today. Privacy, we'll get into that in a minute. And in Israel also there's a context of the government has a policy actually to decrease the use of cash in order to fight the illicit economy, and CBDCs could maybe assist with that as well. So let's delve into this one, this motivation of paying digitally while maintaining a certain level of privacy. What do we actually mean by that? So if we think about today, there are actually two completely distinct situations, two completely distinct models of payments as far as the information on the payment and the privacy and anonymity. If I'm paying with a digital means of, this is Bob, or we'll soon see that his name is actually Israel. Okay, so Israel is paying his supermarket, and he's paying with a credit card or with a bank transfer or a payment app or something like this. So he buys his gallon of milk from the supermarket, okay, and then the transaction creates a ton of data. Okay, so actually the financial entities who are involved in this transaction, the credit card companies, the issuer, the merchant acquirer, the bank, whoever they be, the creator of the payment app, they get all of this data. They know that this morning at 11 in the morning, Israel went to Mr. Cohen's supermarket and bought something for $5.90. That's a lot of information that they have. Okay, however, and by the way, they may share some of this information with the supermarket as well. Okay, so the supermarket might actually get information about who bought from them, and they could maybe use this information in the future. And more than that, in some situations, this information may also go to the sovereign, the government. the tax authority, the AML authority. So in some situations, the government may actually come to the financial institution and they may want to request the information, of course, in order to fulfill their roles and to maintain the law and etc. So the tax authority may want to know how much milk Mr. Cohen's supermarket sold in a specific month, and they may want to do that in order to audit his tax bills and etc. So there's a lot of information that is created when Israel is paying his supermarket with a commercial bank money and a digital means of payment. If, however, Israel chose to pay with cash, there is no information, okay? No one would know anything. No one would know who bought, when they bought, what they bought, and etc. So actually, you can see that today we live in a world of two very distinct situations, and we're actually thinking that when we talk about CBDC, we may have actually an opportunity to rethink this model, because we're thinking about creating central bank cash in a digital manner. So we could theoretically do it completely anonymous, like cash. We could theoretically do it completely unanonymous, like commercial bank payments are today, or we can maybe find some model in the middle. And this is a policy question, kind of a societal question, and it's also, of course, a technological question. Okay? So actually, we were thinking about this topic when we published our first report back in May 2021. And to kind of sum up what we wrote about privacy there is the following. First of all, this is an issue that requires in-depth discussion. Great, so we won't just make the decision out of our minds. Okay, we'll think about it thoroughly. And it's probably a societal decision. It's probably not just something that the central bank can decide upon itself. What will be the kind of the model of privacy of digital payments in the future? One thing we did write, though, was that that CBDC will never be as completely anonymous as cash. Okay? Because we are all aware of the problems that result from the fact that cash is completely anonymous, the tax evasion, the money laundering, and etc. So CBDC would never be as completely anonymous as cash. We haven't really made a lot of decisions regarding the design of the digital shekel, but we did make that decision already. However, we may be able to decide regarding the extent of privacy of the user vis-a-vis, so what we wrote in the report, we may be able to decide on the extent of the privacy of the user vis-a-vis the payment institution. And actually, we can even extend this notion a bit further. So for example, we can think about all sorts of parameters of privacy, or all sorts of surfaces where you can cut across the discussion of privacy. For example, we can think about this should have a title here in the top, privacy from whom? Okay, sorry, that also was deleted somehow. So we can think about, first of all, the privacy from the financial provider. For example, maybe I want to pay my psychologist, whom I actually see online in a Zoom meeting. I don't see a psychologist, by the way, but if I did, I could, and I could actually see him by Zoom, for example. Okay, so if I see him by Zoom, I can't pay him with cash, right? But maybe I want to pay my psychologist without my commercial bank or my credit card company knowing that I see a psychologist. Why is it their business? Maybe I do want them to know that, because maybe if they do, they'll tell me, listen, Yoav, there are 500 more psychologists in your region, you can try others, and etc. So, but maybe I should have the choice. Okay? We can, of course, think about privacy from the sovereign. There may be some legitimate transactions that I may not want the government to know that I made as an end user. And we can also think about the privacy from the payee. I'm really sorry, here my only good example is to think about what happens if you walk into a kind of a sex shop or something like that, okay? So I buy whatever, I don't do that either, but I buy a device or something, and the last thing I want is for the owner of the shop to send me an email, hi Yoav, hope you enjoyed the product, do you want something else? We have another variety. No, I don't want that, okay? I want to pay with privacy, even from the payee. This is what cash gives me. I can enter a store, I pay the person, they have no idea they can't trace me whatsoever. We can also think about privacy for whom. We can think about different privacy parameters for individuals and for merchants, for example. Okay? An individual has a right to buy something without anyone knowing for how much he bought. It's his own business, as long as he's not buying guns or drugs. Okay? A business actually has a duty to report to the tax authority their monthly income or something like that. Okay? So their entitlement of privacy is actually a bit different. And we can think about all sorts of parameters of privacy regarding what? So we can think about privacy of the amount. Okay, so maybe the government can know that I bought something, but they are not entitled to know for how much I bought it, for example. We can think about different transaction types. So we can, for example, decide theoretically that consuming psychological help is a transaction type that can remain completely anonymous. Okay? However, consuming medication may not be completely anonymous because we want to monitor, I don't know, if people are not buying something they're not allowed to buy, and of course other stuff. And we can also think about all sorts of data that are actually in the transaction that we can decide whether these would be anonymous or not. So what did we do? Oh, there it is. My bug, I guess, not yours, sorry. And by the way, there can also be all sorts of intermediary models. Okay, so we can decide maybe that some people are allowed to privacy and some people are not. Maybe this also, by the way, has to do with the business model of the whole thing. Because if we're not giving the financial entities access to data, maybe there's an issue regarding the business model. So maybe some people can actually want to buy their privacy, and some maybe want to sell their data, and etc. So what did we do? We actually went and asked ourselves, does technology offer us any new opportunities regarding this issue? And it so happened that we came across this new model that people from VMware have developed, and they'll be telling you about this right after I finish here. We actually published our work as well, so you can read about it. And by the way, you can read about all of our work on the Digital Shekel project at the Bank of Israel website. All of the information is in Hebrew, and some of it is also in English. So what did we do? The motivation was actually to explore. So actually, if we think about it, these two distinct situations that we live in these days, they're actually kind of a result of technology. The fact that there's no data in central bank money is because of the technology of central bank money, because it's a piece of paper. So it doesn't hold any data on it. Okay, it's not really a decision that anyone ever made. So now we can actually explore, does technology allow us as policymakers a wider menu of alternatives as compared to those that exist today? Because today, if it's digital, so the information is there. And if it's physical, there's no information. So once again, does technology allow us anything else? This is actually what we kind of asked the colleagues from VMware, and they actually came up with this answer. They came up with a technology that enabled us to actually set what we called like a periodic threshold. So the business model here is as such. Let's assume that the government is willing to allow each person in the economy a periodic budget of, say, whatever it be the number, 500 shekels a month, and that person is entitled to pay 500 shekels a month digitally, anonymously. So you can use that to pay your psychologist, you can use that to buy flowers to your wife or to whoever you want to buy flowers or whatever. Okay? And then once you've exceeded this allowance, the rest of your transactions are actually completely visible on the ledger to whoever has access to the ledger. And so your wallet actually holds a periodic budget of anonymous shekels, and then the rest of your shekels during that month or day or week or whatever that we decide on the time period is actually completely visible on the ledger. This is all that I understand regarding the technology that we implemented, and it's a good thing that Itai is now getting ready to explain the technology behind it, because for us, from the business requirement, this is what we actually wanted to see. Is this possible? Of course, it's not a complete business model. It's not like this technology is ready to be implemented, but it's definitely something interesting for us as policymakers to understand. Does technology not actually provide us a wider menu of options than we had until current days? So just to sum up, a few policy questions that came out for the fact that we actually implemented this in experiment. First of all, of course, okay, so let's assume that the technologists come to the policymakers and they tell us the technology is ready to use, okay? What would be that threshold? Is it 100 shekels, 500 shekels, 1,000 shekels? How do we decide on it, okay? For what purposes? Will there be different thresholds for different types of wallets? Maybe businesses, as we said earlier, should not actually be allowed to pay anonymously at all. Maybe there should be different thresholds for adults, children, and etc., different types of users. Once again, maybe different types of transactions. For example, we all seem to agree here in the room that it is legitimate that a person should be able to pay anonymously for meeting with his psychologist, but we would probably all agree that if it was legal to buy firearms in Israel, we would probably not want to allow people to buy firearms with anonymous digital shekels, right? And then we probably want to exclude that type of transaction from the ability of this special technology. So once again, this is a societal decision that would need to be made. Could there be some wrong incentives here? Like maybe let's assume that I actually ran out of my privacy budget, but then I could come to someone in the audience and say, listen, I'm willing to pay you 1,000 shekels if you're willing to let me use your 500 private shekels to buy something that I want to buy privately. Okay, so this of course would not be a result that we want would happen. And last but not least, and maybe this is kind of the question to this forum and to this room and to this conference, are there more kind of technological alternatives that we as policymakers need to be aware of? Does technology actually allow us more alternatives as compared to what we have today, which is cash completely anonymous and central and commercial bank money completely unanonymous as opposed to the commercial entity? It would be very interesting to understand if there are new things that we need to think about that come from the technological advancements. Thanks very much.
We have time for a couple of questions.
I have time, if you have time.
Can you go one slide? Yeah, thanks for the presentation. I actually have 3 questions. Will this be some kind of a tiered system? And who will bear the liabilities of having KYC of the end user? That's question 1. Question 2 is, will you aim to mimic all the properties of cash today? Will there, for example, be offline payments and local wallets? And third question, who will bear the custody? And will you provide options for custody, such as self-custody for the end user? Or will that be done by the bank?
Okay, so these are all great questions. They're kind of beyond the topic of the presentation, but they're definitely relevant for our project. I think I can answer your first and third questions together. The model that we are considering, as well as many other central banks, are what we call a 2-tier system. So it would actually be the case that while the liability would be a central bank liability, the interface or the app that the end user would be receiving would not be an app provided by the central bank. So there would be institutions, they could be financial institutions, they could be technological institutions, there would be institutions that would actually provide you the access, and these institutions would actually compete on the features that they would provide, and they would also be the ones to do the KYC, by the way, because they're the ones who have the expertise on that, not the central bank. Regarding the way it would be custodied, so this is kind of still a technological decision that would need to be made, but if you want to think about it as really a CBDC, you want to think about the fact that the end user is actually holding their funds, for example, in a wallet, maybe one not in a local wallet, okay, but that there is no one financially between the end user and the central bank. So this intermediary is only providing you kind of the technical access. This is the model that we're trying to think about and develop. By the way, this is what we're testing in a project Sela that we're doing together with the Hong Kong Monetary Authority. Offline payments in CBDC are one of the hottest debates, I think, in the field. There are all sorts of technologies that claim to be ready for this. I, as a non-technologist, cannot really say if they are good enough and safe enough. I can say that even in the business requirement, we're actually having an argument within the team. Okay, some people say that it is really important that we allow offline transactions because there could be all sorts of situations where you need to pay offline. Others say that the effort to enable offline and the cost and the risk would actually be bigger than the benefit, especially in the case in Israel where internet coverage is relatively good. And of course, once again, we are not giving up cash. So there will always be cash which will be able to pay offline when needed.
Thank you.
Thank you.